Welcome back to another episode. Today, we're going to take a closer look at three AI semiconductor companies that just reported earnings and are seeing some interesting reactions after hours. We can see Marvell Technologies is down roughly 11%. Iron is actually up 13%, and Dell stock is down roughly 5% after hours. So, in today's episode, I kind of just want to break down what are some of the things investors are excited about and some of the things that they are fearful about for companies like Marvell and Dell. So, let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right. So first, let's start off here with Marvell Technologies. And don't worry, guys, I have so much NVIDIA updates to do in the upcoming weeks, in the upcoming days after earnings. There's so much that hasn't been covered, so many bearish theses that are coming out that I think are just completely bonkers. But I just need some time to kind of produce all that content. Right now, I want to focus on these three popular names after hours. So Marvell Technology, we can see the stock is down roughly 11% after hours, going back to 68. Now, this is a stock that has been extremely volatile, right? For those that are not familiar, this focuses on ASIC and helping big tech players design their own AI chips. This is like the very small brother of Broadcom. I really do enjoy Marvell because I do believe there is an opportunity in their market. They recently had an AI event on June 20th. I believe it was June 20th, where they discussed some of the customers that they are winning, the sockets that they are winning. And I do believe in this AI race, this has the opportunity, not the guarantee, but the opportunity to be a multi-bagger. Now, with most multi-baggers, the market expects a lot, and it's not always going to give us results in a straight line. And that's what happened with Marvell Technologies. One of the main reasons the stock drops is the AI hype is not living out for them right now. They mentioned that their data center revenue is actually expected to be sequentially flat for quarter three compared to the quarter two that they just reported. And the main reason is quarter four is where they expect to see a lot of big revenue from their ASIC plays. So if you are an AI story, the only way you can actually be an AI story is if you're winning every single quarter, and that's not what Marvell delivered. Now, I'm not too kind of worried about the issues of certain quarters being a little bit weak. That's what's expected to be here in the AI ASIC market. And right now, we can see from the company is heavily dependent on a small number of custom XPU sockets, creating significant quarter volatility. CEO Matt Murphy acknowledged these challenges. So given that this is, as I said earlier, we're in the early stages of custom. This is really our first year with a handful of sockets that will translate over to many more. It's really just a timing issue between the quarters, so it's more apparent. Because they only have a very small selected amount of socket wins right now, it's gonna be very volatile and choppiness, a lot of turbulence in forms of revenue. Data centers take time to be built out. Data center solutions take time to kind of be planned out. I do believe this company will eventually find its footing. The market is just expecting too much from that data center ASIC player. They want it to be the next Broadcom or the next NVIDIA or so on and so forth. But I think this one is just going to have a lumpy nature, which is going to create that kind of volatility in the stock. I really do enjoy Marvell Technology. I will be most likely purchasing, not tomorrow, but the overall dip over time. This is one that I want to increase my overall position size. I mean, for those that are not familiar, Broadcom, for example, ticker ABGO, they've talked about it in the past. Even though Google is such a massive purchaser of TPUs, even Broadcom has lumpiness in the ASIC market because it all depends on when those companies need their AI chips. There could be a quarter that data center build out is not done, so they have to push it out for a few quarters. But regardless, I think there is opportunity here for Marvell, and anything under $70, I think is an opportunity for long-term investors that can ride the volatile wave. Now, in forms of some great news, Iron. This is a company that has shifted from Bitcoin mining to becoming an AI data center play. The stock right now is up about 14% after hours after having a nice 3% day to day already. In the past 5 days, not even counting the gains, is up already 18%, right? So in just the past 5 days alone, this stock has jumped up dramatically. Uh, right now, we know that the AI market is compute constrained. So we're seeing a lot of Bitcoin miners. I did a video of them in the past where I talked about a lot of them. Iron was actually one of them that made the list of the ones I was curious about because of some of the strength there. This is the market that is constrained right now. Power shelves are needed, and Iron has a lot of data centers globally that it can rent out, lease out for the needs of those AI infrastructures, and it's also filling some themselves. A great business that is seeing great transaction right now. Now, what is the market loving? A lot of things. First, massive cloud expansion, right? They continue to expand. They have about 11,000 GPUs with clear revenue path. Within this, they expect that these GPUs will be having some form of strong revenue by the end of this year, and expect about a 200 to 250 million annualized revenue on just their AI cloud business alone. They are also becoming or have gotten NVIDIA's preferred partner status, which helps enhance their supply access so they're able to get more products. They announced that the next generation of the GB300 and the L72 system is going to be at their Prince George campus. They also are creating a form of financial structure that is non-dilutive at the moment to investors, which is also pretty impressive. And outside of that, the company does expect to approach an annualized revenue of about $1.2 billion, thanks to obviously its Bitcoin minings, but more importantly, the potential of those AI GPUs from NVIDIA. So overall, this is kind of painting the right story in this AI era. I could see a lot of growth opportunity here. Now, I talked about it in the past. For me, I like Iron, but right now I'm really just focusing on one player, CoreWeave. Now I wouldn't say that I think CoreWeave is maybe it is. I like CoreWeave right now. I know that one more. I believe CoreWeave is a multi-bagger, but I can see this one also being a multi-bagger if things kind of expand in the right direction. So there's opportunity here, and I can see why the market likes it. I'm just not going to go and buy it just because I really want to focus all my money right now in CoreWeave. That is going to become a really big position in my overall portfolio. And I will be covering that in another episode. Now, if you are enjoying the episode, I don't know if I've said it so far, make sure to hit the thumbs up and the subscribe button. We hit 75,000 subs, which was my goal for the end of the year. Now, the new goal is, can we do 85,000 by the end of the year? That would be crazy. It's way above my goal, but this is the best place you're going to find any semiconductor and AI news. Now, the final company we have here is Dell Technologies, ticker DELL. Now, the stock is down roughly 5%, sitting at $127. Year to date, the stock is not counting the drop, was up about 15%. Obviously, we're going to see some of those returns down. It's most likely going to be up closer to like 8% on a year to date basis. Now, they did be on earnings. They did be on revenue. It seems like they are falling on soft third quarter earnings outlook. Now, I think there's a little bit more happening here as well. So for me, a few things that really caught my attention. Their storage business underperformed with continued weakness. Right now, you would expect it kind of like the storage market with this all the AI data needs to continue to grow. But they mentioned demand was a bit slower, particular month 2 and 3 of the quarter, and in the United States. And this is a core revenue for them. The other thing that is, even though their AI business is growing and they believe they're going to get $20 billion in AI server sales by next year per annual basis. This is a market that is very competitive, and for so that reason, it's dilutive on earnings, is creating margin compression. So gross margins as a percentage of revenue dropped to 18.3% from 21.4% a year ago. The main reason is AI revenue has become a bigger mixture of this, and that has a dilutive effect. So again, it's like you're growing a revenue, which is great, but that earnings now is going to be worth less because your margins are decreasing. Outside of that, they are seeing some of customer uncertainty in hyper converged infrastructure segments. They're saying that some of the private cloud options right now are debating how they want to go with any forms of upgrades, and it's creating a little bit of a slowdown in some of their AI servers. So right now, the CFO has warned of potential rare compression for the second half, but also based not on the AI servers, but on their core business. Their consumer client, for example, is expected to maybe see a bit of a weakness in the second half. So despite some strength in the AI market, margins are being compressed, and there's certain other core markets that Dell is in that are seeing a bit of a softness or some hurdles right now. I've talked about it in the past. Dell Technologies obviously can benefit dramatically from this AI era. I mean, they have the AI hardware. They hit various markets from premium consumers to the AI server side. But for me, it's just a hardware business. And I'm personally not a fan of the competitive in this landscape, right? I don't think there's really much a moat in this space, not even true partnerships that can help you create kind of like an imaginary moat. So for me, Dell Technologies is one I don't want to own in my portfolio. I can see the excitement with the AI servers, but if I was to, if for me, if I had to choose between the three that if I had to eliminate one, it would be Dell. If I had to choose the two, Marvell and Iron are definitely potential players. The one I do own is Marvell Technologies, though. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.